If you're shorting an asset but expect some temporary upside, how do you generate profits? Without giving up your short asset position, you could buy a binary call in Divergence as a hedge or to profit from a price rally. We'll explore how it works in this tutorial. First, let's say you short 1 Ether. Your profit or loss is linear. You make a profit if the price is lower than your entry position. You earn the difference between your entry and buyback price. If you buy a Spear token using a fraction of a stable coin like Tether, you are buying a cash or nothing call. At expiration, if the Ether price is above your strike, you collect 1 Tether as your option payoff. Your profit in this case is the difference between 1 Tether and the premium you pay. Otherwise, you lose your premium. Now let's see what happens when you short 1 asset and long 1 cash or nothing call. Suppose your cash or nothing call has the same strike as your asset entry price. If the price is below your entry, your short asset position will be in profit, but you lose the premium in your long binary call position. When the asset settles above the strike price, your short asset position would be underwater. However, you get paid a fixed amount of cash by your long binary call position. You'll notice that this payoff structure looks similar to shorting an asset and selling a binary put. This is because the combined value of a binary call and a binary put equals 1 collateral. As you can see, this strategy can be used when there's uncertainty in the price direction and you want to hedge for your short asset position. Also, if your asset continuously moves higher, you could buy a strip of binary calls at different strike prices so you could generate profits. Anyways, let's remind you that options trading involves risk. This is not financial advice. We hope to see you soon trading on Divergence. If you have any questions, you're welcome to come ask in our Discord or Telegram channels.